Hello and welcome to the weekly wrap video. A couple of things to round off from the past 5 days of trade. We've seen a slide on Wall Street across the 5-day period, putting a bit of an end to the recent run-up we've seen as the FOMC, the Federal Reserve, kept hold of their $85 billion a month QE program. However, a lot of participants had expected the Fed to express quite a lot of concern in regards to the impact on US growth from the 16-day government shutdown. How this was not delivered, keeping December and some other 2013 rate decisions from the Fed still on the table in regards to a potential time frame within which to conduct a QE taper and pull back from that extended liquidity to the US asset classes. As such, we've seen equities slide and yields climb in the US, coming just above 2.6% for the 10-year yield on treasuries. And then over in Europe, a lot of focus has now shifted to next week's ECB rate decision, with a lot of Tier 1 banks and investment houses now revising their calls, seeing a 25 basis points cut to the refi rate next Thursday. This all follows a very much lower than expected CPI figure out of the Eurozone for the month of October, and this allied with the continued shrinkage of liquidity in the Eurozone as those banks continue to pay back the LTRO repayments has stemmed some of those investment houses to see further easing from the European Central Bank as soon as next week. This has resulted in a lot of weakness in the Eurozone, single currency, the euro, this week, coming back below the 135 figure against the greenback. And then just to round things off, we've had quite a few earnings throughout the week. We've had UK banks, the likes of Barclays, RBS and Lloyds Banking Group, as well as some of the big petrol and oil and gas names over in the US, Chevron, ExxonMobil, to name just a few. Earnings do continue to surprise slightly to the upside over in the US, with the bulk of the S&P 500 now having reported. But of course, as we head in towards next week, more stocks news on the calendar. We have the Twitter IPO due to take place next week, likely to be closely followed, following the bungle that we saw in Facebook last year. But of course, on Thursday, that ECB rate decision comes just one day ahead of the change in non-farm payrolls figure for the month of October. 1 week delayed from the usual time of the first Friday of the month due to the delay in the previous reading, which of course disappointed expectations. So we'll bring you all those releases as soon as it hits the wires, as well as any other relevant commentary to your trading. But in the meantime, that's all from me. Make sure you have a fantastic weekend.